What's going on, guys? Welcome back to a new video on my channel. In this video we're going to be taking a look at CF stock, CF Industries, right? And let's take a look at this stock. So first of all, let's take a look at the chart, and as you can see, there's nothing crazy in this chart. It is down a little bit, probably like 30% or something. Yeah, precisely. This is not too big of a company. As you can see, the market cap is only 16 billion. It's not too small, however, and their P is pretty good. So let's take a look at this company. So first of all, let's take a look at what they do. And here it says that they engage in manufacture and distribution of nitrogen fertilizer. So they do some agricultural crap, which I like because agriculture is not going away in the near future. So we're fine on that, and the moat is pretty good as well. So let's now move on to the growth, and as you can see, there's some changes in the charts, and there's no forecast because it is added into the growth right here. So as you can see, their margins are very good overall and are predicted to be amazing in the future. However, their revenue is to go down a lot, and also their earnings. So as you can see, they had a 3x, more than a 3x in earnings in the last year, which is not amazing. Well, it is amazing, but it's not amazing for the future because, of course, it's not going to continue growing like this. But now let's move on to the free cash flow chart. In here, this is way better because even though the revenue is still going up, the free cash flow is a lot more steady, and the growth isn't as big, isn't as concerning to the future. Also, the margin is huge and it's pretty stable also, so that's pretty good. Now let's go to the valuation. So, as you can see, in the last year, CF had a P of 5, which is pretty insane. However, their 5-year PE is 20. And that just tells us that, okay, right now, the company might be very undervalued. But there's a problem with this, and that is that we do not know their earnings to into the future, right? And as you can see from the forecast, it's not very bright for the earnings. So the PE might even double for the next year. But anyway, so enterprise value, pretty good enterprise value and enterprise to free cash flow, because I mean 5 right now. So they basically have no debt. But we'll look at that a little bit later. And now for their market cap. Now this chart is a little concerning because first of all, I mean the book value compared to the market cap is great. Don't get me wrong there. But the percentage of current assets is not very good. Like, you can see that it's just not very good. Like, it's 27% in the last year, which is pretty bad. But then, like, 8% in 2019. And the reason this is important, guys, the reason percentage of current assets is important is because it shows how many of the company's assets are tangible and can be used immediately. And then this is just a chart for comparison, so you can see that they really are making a lot. But now let's move on to the health. And as you can see, the debt right now is very controlled. However, the debt in the past of this company has been really high compared to their cash, especially, and their free cash flow is just kind of all over the place. Of course, beautiful growth in the last 3 years, but is it gonna continue? I mean, that's a topic for another day. Now, actually, that's a topic for the end of this video. However, now for the shares outstanding, which is just an amazing chart. They've bought back 30% of the shares in 10 years. That's just amazing. And then for the assets and liabilities, there's nothing special here. However, in the last years, their assets are kind of stagnating. However, their liabilities are going down, so that's great. And then we don't have to look at how their assets are divided, but you can see that they have a lot of cash and a lot of property for the assets, and then they probably have a lot of debt, I would say. So accounts payable and long-term debt, yeah. But anyway, now for the returns on capital. So first, the return on equity. So you can see that it's incredibly high in the last year because of the insanely high earnings, but in the past, it's not too bad either. I mean, it was like 30 back in 2014, and right now it's not too bad. I mean, it was like 10. It was around 10, and now it's 74, so that's amazing. And then the return on assets is also not too bad in the last 2 years. Of course, very good in the last year, but pretty okay return on assets, to be honest. And then the ROIC is in the last year amazing, of course. And then in the last couple of years, it's not too great. I would like to see it over 10% as a historical average, but you can see a very common trend in this company, and that is that the last year or maybe last 2 years are very well hyped, or I don't know how I would call this, but basically, the last 2 years are showing insane results compared to, well, dating back 10 years, right? So that's something that we're gonna have to take a look at. And then they do pay a dividend, actually, not too big of a dividend. It's about 1.8%, but then their payout ratio is 9, and right now, so that's great. However, their earnings are insanely high, so that's a thing to consider. The change in investments, you can see that they haven't really been doing any of that, so that's fine. And then acquisitions, also some in the future, however, none. So you can see that they aren't really investing in their company, which is kind of concerning. But now let's move on to the calculator. And this is a thing that you have to be very cautious about, because CF has grown 71% in the last year, 29 in the last 5 years, but that's just because this is a part of the 5 year, and then 13% over the last 10 years, probably just because of this number again. So that's very concerning. I'm actually gonna do minus 4 to, actually, let's do -1 and 2, because again, I mean, this company just did some insane growth, so I wouldn't be surprised if it went on a decline for a bit. So yeah, the profit margin, I'm actually gonna go a little bit higher, but definitely not 29%. So let's go for what? I'll go for 14, 16, and 18. And actually, I'm just gonna go a little lower. I'm gonna go -6, because I just feel like this company just needs a little beating. So 0 there. This just is insane, guys. But anyways, so that this doesn't mean that they're gonna, decline for the next 10 years by 6% annually. It just means that they're definitely gonna decline in the next couple of years and then might grow back, but they're still overall gonna be in a decline over the next 10 years, is what I'm thinking. Now, for the free cash flow margin, I'm actually gonna go a lot lower than what's in here, because it's really high right now, and I'm just gonna go for maybe 16, 20, and 24, which might be pretty good. Now, for the P, it's really low right now, but to be honest, it's pretty good right here. I'm gonna change it a little. I'm gonna go 12, 15, and 18. And same for the price to free cash flow. I'm gonna go 10, 13, and 16 maybe. And then, as you can see, guys, even if this company is going to be on this huge decline for the next 10 years, in the mid scenario, it's still about 8% return if you buy it at this price. However, I would not recommend buying it at this price. And actually, I'm just going to add this at my watch list at the low, because you never really want a company that has this well, negative trend, but definitely gonna take a look at this company in the future also. But right now, I mean, I just don't really know if it's even a thing that I should be looking at. But anyway, I'm just going to add this company to my watch list at around 50, because I don't think that that it's just a good buy right now. I'll maybe take a look at it later. So it's already in my watch list, but I'm just gonna replace that. And yeah, so it's at 45 in my watch list. So it's not even close right now, but definitely a thing to take a look at in the future. Might be a good opportunity when the earnings drop, and when the price drops with them, hopefully. Definitely going to take a look at this stock when it's at about 55.50. So I'll see you there, or maybe in the next video. But for now, I hope you enjoyed this video. Oh yeah, one more thing. If you want to go and check this website out, you can at this link. You just kind of click sign up, and then you can sign up for free at this link. I'll make sure to leave it down in the description. It's a little weird with some kind of letters. It kind of looks like a scam, but I promise it's not, guys. And you can just go to the sign up, and well, you can just use your normal Google account, or just sign up with an email and password. And then yeah, so it's pretty much free. You can do anything that I do with it. You can follow along in my videos. There's a ton of new features coming up in the future. So yeah, anyways, I hope you enjoy this video. Make sure to like and subscribe if you enjoyed or learned something, and I'm gonna see you next time.